Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, March 21st, 4:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in a correction, rallying off the bottom, currently being led by tech. Today we got a little bit of a bounce from two of the most beaten down sectors. If you check over here on the trend gauge, you can see leaders. The arrow just keeps improving, and we'll take a look at why when we dig into some of the charts here. But it looked like the market the last 2 days has front run the Fed. 2 days of decent gains, and we'll see what happens when Powell speaks at 2 p.m. tomorrow or releases the statement, and then has the press conference at 2:30. But and this is kind of common. The temptation is to play it very tight leading in to the Fed. But if the market's going to rally, we can take some of those gains. We can lock them in beforehand. We can hedge them before the meeting. Uh, and that we got a little bit more involved over the last 2 days. And again, we'll talk about that when we go through the tail of the tape and the focus charts. So the five major indexes versus their moving averages on the three time frames that we track, short-term 21-day continues to improve. The S&P gapped above the 21-day today. The Nasdaq 100 has been above the 21 for a while. So the big drag of banks and oils on some of the other indexes, like I said, we got a bounce on that today, but not enough to get us back above the 21 or the 50. Medium term, we're still showing a downtrend there. Nasdaq 100, the only one of the five major indexes that's above that's 50-day moving average. Long term, second close above the 200-day today for the S&P. Again, the reaction to the Fed announcement tomorrow and the statement and the press conference, and then we've got Thursday and Friday after that to certainly keep an eye on. So we're neutral long term there. But the mid caps closed right on their 200-day moving average, and I think by the close the Dow might have been above. We'll take a look here momentarily. So what happened today, as I mentioned, oils and financials, the two big dogs recently, especially financials, they led pre-Fed strength, and S&P 500 got back above its 21. The final numbers very green. We gapped up across the board at the open, but the Nasdaq 100, although it lagged at the open, ended up gaining strength during the day, despite the fact that semiconductors lagged. So FANG stocks, again, money flowing into them. Our G6, this is our 6 ETF composite, up 2.3% on the day. S&P up 1.3 after a 9/10 gap up. Nasdaq 100 up 1.4 after a 7/10 gap up. Dow up 1%, which is right where it gapped in the morning. Mid caps up 1.8. Russell up 1.9, which is basically where it gapped up in the morning. So the improvement was within tech, and that bled through to the S&P and obviously the Nasdaq 100 since it's tech heavy. Global diversified 60/40 stock and bond up 0.68% today. Bond prices down across the board again, which means yields ticking up. That's a further sign that some of the fear is coming out of the market or out of the banking sector as the yields tick higher as opposed to them going down with all the money flowing in that suppress the prices or raise the prices and suppress the yields. In-house GROTECTION up 0.65% as we continue to add exposure gradually and position ourselves in the leaders. We've got starters in 7 very attractive stocks, and if the market wants to go higher and growth stocks are going to lead, we're ready to participate in that. Then we'll go through the tail of the tape, charts of interest, and I want to talk about gaps up. And particularly, I want to talk about something that I'll be attending this weekend, gaps. I've done a webinar on them. Jason Thompson, who runs a trader chat that I'm a part of, and John Poco, he's Rain King on Twitter. They put together a pretty phenomenal earnings reaction gap workshop. Really, a lot of statistical analysis went into this, and it's pretty exciting. It's on the a little bit on the expensive side, but you get what you pay for. If you think education's expensive, how about the price of ignorance? And I wouldn't be talking about this if I didn't think it was going to be worth it. So there's a earnings reaction gap workshop. There's a video on here at tickermonkey.com/ERX gap workshop that talks, John talks a little bit about it. And then there's some detail here on the VIP workshop and or the full day workshop on what they're going to talk about. And like I said, I've been previewing some of this stuff, and it's really fantastic. So if you're interested in that, check that out. Tickermonkey.com/ERX gap workshop. So let's get into the charts here, and we'll start off with what we do at Revere Active Management. We identify strength and weakness in the market across 3 time frames and what leading stocks are doing with the market through a various look at some technical indicators, mostly moving averages, support and level lines, stochastics, price and volume. So looking at a weekly chart here, last year was a bad year in the markets. We avoided most of it, down less than half of what the market index S&P 500 was, because we can recognize when the market is unhealthy. And this black line on the chart here is kind of key to that. All bear markets take place below the 200-day moving average. When you're under there, you know that risk is high, and you look for indicators that you're going lower or indicators that you might be rebounding. But we avoided most of the carnage, and now this recent bank crisis got us back below the 200-day moving average after rallying back above it in January, testing it in February, but now back above it over the last two, 3 of the last 4 days, last 2 days, some nice gains leaning into the Fed, and also back above our short term, that's the green line, 21-day moving average, running into the medium term red line, that's the 50-day moving average. But as leading stocks continue to act well, we've got our 21 over 21 list that we update every Friday. That's where we do the majority of our buys from. And we're going to go through 8 stocks from there today that were up more than double what the S&P was. So all in all, a good day for the S&P and for bulls. Here's the NASDAQ 100 making higher highs in this nice 6+ week base, 9% deep that it's in, coming up to the right side of it, kind of straight off the bottom. We've been up 1, 2, 3, 4, 5, 6, 7 of the last 8 days, coming into some resistance here around this 310 area. 313.68 would be the breakout. I'd expect volatility tomorrow with the Fed. We always get it. They try to run the stops to the upside and stops to the downside. We're positioned beforehand, have gotten a couple of gains, some gains over the last 2 days, and then we can either hedge or, of course, keep our stops in place. So we'll see what happens at 2 o'clock Eastern tomorrow. Dow Jones Industrial Average. Here we are back above the 200-day moving average after breaking below it as part of the banking crisis into the declining 21-day moving average. Mid caps really got hit, as you can see, as part of this banking crisis, but closed basically right on the 200-day moving average. Small caps, which have been the weakest by far, still significantly below the 21. Let's take a look very quickly at the bank indexes. Regional banks, KRE, up 5.8% today, trying to put in a bottom, not making higher highs yet versus last week, but it's a start. If we can put in a bottom here, continue to not see any more crises popping up. We had Yellen speak, or a statement come out from her that was part of a speech that she was given today, and she basically said we'll guarantee more deposits if we need to. That led to the gap up at the open, and then some follow through strength late in the day as we squeezed into tomorrow's binary event. Uh, the big stock here, FRC, is the one, First Republic, the one everybody's talking about, up 29.5% on the day. It was up almost over 50% at one point, but still getting destroyed off of the top. I mean, it was $148 stock back in late January, and even before the big gap down, it was at $120, now trading at 15.77. So you recognize weakness and stay away from stocks that are below there's the black line again, the 200-day moving average. Tried to get back above it, failed. We don't hold anything under the 200-day moving average. Now we might buy something that's under it if various conditions exist, and that's for another time and another place. But um, okay, so those are the major indexes. Let's go to the dollar. Dollar hiked today, down 0.04%, sitting on the 50-day moving average, really at the bottom of this range that it's been in over the last 5 weeks. The VIX with a big drop today, back below its 21, breaking below the bottom of this volatility range that started on the 10th. Arguably, it started on the 9th, but back in that range, also back below the 21, below the 200, getting down into that 20 area, which has been a tailwind for stocks. Let's flip to bonds now. The broad bond index BND down 0.27, trading in a tight range now for the last 7 sessions. Uh, as volatility in the bond market calms down a little bit. The 30-year TLT down 0.86% on the day. Corporate bonds LQD up 0.5% on the day, still hanging right around that 200-day and 50-day moving average. Junk bonds up 1.14%. That meant their yield was lower, which is good, which means there's less of a demand for the interest rate, and that's a sign of more confidence. Not a big sign, but somewhat of a sign. You can see this declining 21-day has been containing the price on JNK. Let's go to yields now. So I said price is down. This means yields up. Here's TYX, the 30-year. Up into the declining 50-day moving average, coming off of oversold, up 2% on the day. Pretty big move for the 30-year. The 10-year TNX up 3.6% on the day. So big move off the bottom again, showing a little bit of confidence anyway. Now, with confidence coming in, gold, which was the no confidence trade, broke below its pivot, and we took half of this off today. The reason we bought it last Friday was who knew what was going to happen over the weekend from a bank contagion standpoint, but things seem to have stabilized a little bit over the last couple of days. So we sold this for a little more than a 2% loss. Still holding half of it. We'll see how that plays out after the Fed tomorrow. GDX, gold stocks down 3.6%. SLV down 0.72%, and Bitcoin BITO, this is Bitcoin futures, up 1.4%, making a higher high as that risk on trade, or I should say risk on. Normally it's a risk on trade. It's kind of funny. In this, it's been a fear trade as money flows into Bitcoin and out of fiat. So higher high on that. Divergence from what gold is doing with it, making a higher high in gold, having the big pullback. So Bitcoin bulls continue to do their dance. So those are the major indexes. Let's go to the tail of the tape now. Big change. The changes here is that we're not on the bear case anymore. We're kind of in a tide situation. The winner is going to be what happens the rest of the week with the Fed and the reaction afterwards. I mentioned the news, Yellen, additional guarantee deposits if it's necessary. FRC rebounded 30%. FOMC Wednesday at 2 p.m. Rate hike odds up to an 86% chance of a 25 basis point move. Now, this is again out of the fear trade, and the market pricing in actually a 25 basis point gain. And then quickly by the summer, they're pricing cuts. So that doesn't make a lot of sense, but not everything in finance does. The day count from up one to up two, second day above the 80 EMA, first day back above the 21 EMA for the S&P 500. Expectations went to positive now with one close above the 21. We definitely want to get that second close and certainly want to close the week above that. As far as the key levels for the S&P and the Nasdaq, closed above the 4,000 resistance level. Actually, there's a range 39.99. You can see down here 39.99 to 4,007. Two key fib levels on the S&P, and we're in that range right now. Also in a range, resistance range at the top of that flat base that we're forming on the Nasdaq 100. Here's the intraday action. Uh, Banks keying the gains today, along with oils, retail, and solar. On the downside, gold and silver stocks, and defensive stocks. That's staples, utilities, and real estate, XLP, U, R, and E. SOX, which has led recently, taken a little bit of a breather. It was down most of the day, ended up 0.20, so certainly a laggard from what it's recently been doing. Here's the focus list. This is what we own in the portfolio, sold half of the gold, and 8 from our 21 over 21 list that are up more than 2 times the S&P today. We'll go over those. In-house, we saw Tesla got a credit upgrade from Moody's overnight, and it was gapping above that 21-day moving average level that we'd been monitoring. We added 1% to it pre-market, and it went on to have a fantastic day, up 7.8% on the day. We bought ONON. This was a gapper. We'll show these charts in a minute. We sold the rest of our hedge with a gap above the 21, and we trimmed GLD as we mentioned. So the bottom line, oils and banks, the recently beaten down sectors, lead pre-FOMC strength. S&P regains the 21. We'll see what the Fed has to say tomorrow. Here's this fib level again that I mentioned, 39.99 and 4,007. Above that, 40.12 is the 50-day moving average. Excuse me. So let's get to some stock charts now, and we'll start off with the buy that we did. ONON reported big gap up, massive volume, 1,091% above average volume, up 26.38% on the day. And if you say you're afraid, you just can't buy stocks like this, you're certainly entitled to wait. But this is the signature, and they're going to talk more about this in this gap workshop. Let's go back and take a look at which was then Facebook, is now Meta. And let's go back to 2014. And this is the poster child for monster earnings gaps up right here. 725 2013. Meta had the beginning of its moment in the sun. Before then, it was just a so-so IPO. They reported a big earnings and revenue gain based on them solving uh, their application on mobile, monetizing it, was up 30% on the day on 749% volume, and it just went on to a massive run after this. Now, just because this gapped up, the ONON gapped up with similar to better volume and price numbers today, doesn't automatically mean that this is what's going to happen. But ONON is a shoe company. William O'Neill has had a lot of big winners in retail and retail apparel in particular, and shoes more specifically. So David Ryan was on IBD Live this morning. He says he's always looking for retail stocks. This is a nice cup and handle stage one that it broke out of on massive volume. We just know from history that this could be the beginning of something big. So we bought one position, 1% right after the open, added another percent after we were up a few percent, and we'll see where it goes. We can add to it. And the best part is we've got to stop. This should not break below the low of the gap up day if this is going to work. Now, I know that's a decent way down, the low of the day being at 25.50, but um, this is the signature of potential big winners. And they're going to quantify that and go into a lot more detail on that webinar. I've talked about these for years. I did a gap webinar, but it was a lot of generalizations. They're going to get specific in this gap webinar. So if you contact JT, uh, tell him Don sent you. He knows that I'm talking about this tonight in the video. And no, I don't get paid for doing it. I've been in that chat for years. I respect Jason and the work that he does. I know John is a fantastic can slim trader, and a lot of do-it-yourselfers could certainly benefit. Just consider it tuition on your road to being successful in trading growth stocks. So there's ON. That's what we added to. Let's go to the 21-21 list and go through those 8 stocks that were up more than 2 times the S&P today. And surprise, surprise, ON at the top. Next up, Tesla. We now have a 2% position in this. We added to it yesterday, or started the one we had bought. We bought 1% yesterday, added to a pre-market when I saw it gapping above that that 21-day moving average on that news from Moody's. Lantheus up 4.6%. This is honestly, it's another earnings gap that then put in a handle in the cup and handle. Failed breakout initially. That was based on the market. Here you can see the S&P 500 line. Then it got a big upgrade, and now it's making higher highs. So did its job today. PagerDuty. This is another gap up. Pulled back, bounced at the 80 MA, just the way you want it to. And a higher closing high versus the day one close when it was up 354% on volume, up 15% on the day. You see these over and over again. Here's another one, up 3.7% on the day. This was an earnings gap as well. Mercado Libre, not really an earnings gap, but it's acted well since then, poking its head back above that 1220 level, up 3.2% on the day. And Axon, uh, hey, this is an earnings move too, and it was up. But sometimes it takes a while for the market to be right, but the earnings gap and volume, price and volume action point you to them. All you got to do is put them on your list and monitor them. Up 2.8% on the day. Palo Alto, we also own this, breaking above that 190 level decisively now, up 2.7% on the day, and not quite up 2 times the S&P, but GE also with a good day. ANET, which we own, also with a good day. First Solar up 2.2%, bounced off the 21. We own this. Meta, talked about this yesterday in the video. GE Healthcare, 21 over 21 did well today. Not all of them. A couple of them were down, mainly GLD and AMD and ALGM, but and Wingstop. But all in all, the 21 over 21 Fridays list. That's why we keep it fresh, to keep our ideas fresh, and we share them with you every Friday. So that's going to wrap it. As always, love to hear from you. Remember, it's not how much you make in the market, it's how much of that you can keep. We participate when the market's in uptrends. We get out of the way when the market's in a downtrend, particularly when we're below the 200-day moving average, but we've now reclaimed that on the NASDAQ 100 decisively, and for a couple days above it, back above it on the S&P. We'll see what the Fed brings tomorrow. Love to hear from you. Don at revereasset.com. The phone is 855 Real Wealth. That's 855 732 5932. So, wrapping up Tuesday, March 21st, the pre Fed day. We'll see what tomorrow and the rest of the week brings, but good action over the last 2 days. So, this is Don Vandenbord telling it like it is. Thanks for listening and have a great day.